Just to get us going, a little history lesson, and then we'll talk about the workers' comp benefits that we actually provide, as in what are we actually doing here with this coverage. Employer's liability is a part of that, and this is kind of interesting how that comes into play. Now, we get into the nitty-gritty, claims, loss control, experience rating, if you're interested in that, and of course, return to work. Talk a little bit about rating development at the end. But let's get started with this a little explainer video just to set the tone right now.
Hi there. Since you're watching this video, we're guessing you're interested in knowing what workers' compensation is all about. Well, you're certainly not alone. Work comp isn't something people think about very often, and when they do, they likely have more questions than answers. Over the next few minutes, we're going to provide you with a brief history of work comp to help you understand why it's needed. Workers' compensation is insurance that provides protection for employers and employees. The concept actually began hundreds of years ago with pirates. That's right, pirates. Like, arr, that kind. In the days of yore, a pirate's life was not easy. The job of sailing the seven seas, robbing, pillaging, and generally being despicable was not only dangerous, it was downright lethal. To motivate the workforce, ship captains like Blackbeard, Redbeard, and prematurely Graybeard developed a compensation system to help those injured during the course of their less than upstanding business. If you lost an arm, you were paid a fee in gold. Lost an eye? That was covered too. In fact, a complete fee schedule was developed to cover almost any injury. We're guessing maybe 3 doubloons if you need that little peg leg set up. The result? Ship captains, the employers, were able to keep a steady workforce, and pirates, the employees, were motivated to keep working without walking the plank. Now, obviously, in the modern world, most employees are not pirates. Well, copyright issues aside, modern working conditions have fortunately improved far above the days of piracy, and so has workers' compensation. Today, employers purchase work comp coverage from insurance companies, similar to how you might buy personal auto or home insurance, and the policy protects employees who work for that employer. If someone gets hurt on the job, the insurance company pays for lost wages, medical benefits such as doctor's appointments and medications, and other benefits to the employee. The result is twofold. First, employers are protected from big claims that could wipe out their business. And second, employees receive the care they need to recover, return to work, and get back to the business of leading healthy lives. And that, my friends, is workers' compensation insurance. And it's something our company has provided with excellence for more than 100 years.
Indeed, that is workers' comp at its core. Pretty interesting, huh? Never would have thought about pirates. Interesting factoid. Now, I wouldn't recommend telling your family and friends. They will not care. Insurance humor doesn't go very far. I found that out early on in my career. But it is a little interesting that these criminals of the sea were, in fact, one of the early systems where they would compensate their employees. Interesting. Now, of course, they had reasons for that. It's not like you can just pick up more labor when you're out and about on the halfway across the world doing piratey type things. But pirates were those folks, and actually, they were pretty useful in those days, and really think of the Pirates of the Caribbean type of setup here. Maybe there was a faction or a warring, governments someone needed something to happen. Go raid another island. Hey, I've got a pirate crew on retainer here. I know where to send them. But in exchange, at some point, you need to safe port, resupply, maybe heal up, things like that. It was kind of a win-win. So that went along for a little while. Now, as we see in this little history lesson here that we're going to go through in just a little bit, the Industrial Revolution really changed things, and it really changed things for the workforce and ultimately, or with the workplace, and ultimately the workforce. So when you think about the Industrial Revolution, the types of work that were going on here, all of a sudden we were able to create factories. We were able to manipulate steam energy and eventually electricity to do things, build machines that do things, right? So instead of creating objects and items on more of an artisan level, now it's to scale and eventually the assembly line. And so you see a lot of different types of work set up and even different people because they needed folks. And so sometimes even kids were involved in these factories during this period of time. So you can imagine there were a lot of injuries though with a new workplace, a bunch of machinery which could be dangerous. I'm going to say the concept of industrial safety wasn't even there. So machine guarding and lockout, tagout procedures and things of that probably didn't exist. So you ended up with a lot of injuries. There were different ways that different governments tried to deal with that, but ultimately it was going to be either a compulsory type system where everyone was required, or they're going to find a roundabout way. And a lot of jurisdictions did that. A lot of places, England, the United States, is a roundabout way. You could actually sue for damages in those days, but it really wasn't a remedy. It didn't really solve anything. If anything, it clogged up courtrooms and things like that. Now you'll see here, 1911 rolls around. There was a transformation when we got into the 1900s, because I think the whole idea of human capital, what you and I bring to the table, our skills and our ability, the people that we are, we have value to this business or whatever business it may be. That started to gain a little steam. And it really started to gain some steam in 1911, actually March of 1911, with the Triangle Shirtwaist Factory tragedy. Not sure if anyone here has had of it, or has heard of it. Feel free to throw in chat if you would. I'd love to hear who might have an idea of what this is all about. If you have not, though, yes, it does end up in these types of discussions, Antoinette, about safety in in middle school. Okay, Bella, I might want to take a look at my slides here and my examples, but it still does a good job. All right, first of all, a shirtwaist. It's a lady's blouse. So we have a cut and sew operation. Maybe a step up from a sawmill for those that know a little bit of property risk. Highly combustible. Well, here's the thing about the Triangle Shirtwaist Company. They occupied the top 2 floors of an 8-story building. It's actually still in Greenwich Village today. The Triangle Shirtwaist Company did not have, let's say, the most ethical or moral owners. They were more concerned about employee theft and people taking too long of breaks. They did 2 things. Well, one, there was a certain amount of negligence, as in the 2 elevators that were in the building, only one worked. But the worst was they actually locked the fire doors from the outside. Not good. So, as inevitably as possible, or is possible, a fire did break out one day, and guess what happened? Now we had people literally trapped in the building. It was really quite a tragedy. This was in New York, but it got the attention not just in New York State, but some other places. And it was around that time where different workers' comp type statutes or workers' comp statutes were coming into play, but state Supreme Courts were striking them down. New York being one of those states in 1910. But by 1911, things happened. And fortunately, by 1911, on Wisconsin, for those of you, for the Badgers out there, Wisconsin was, in fact, the first state that enacted workers' comp laws that withstood constitutional challenges. So thank you, Wisconsin, for that. Eventually, it took until 1948, where the entire U.S., as well as territories of Alaska and Hawaii at that time, enacted this. And this was, of course, going around worldwide. Today, we've got an entirely kind of a different system. It's a unique system in some ways, but it ultimately was based on what they were doing in parts of Europe, Germany in particular. So we'll dive into a little bit of those aspects as we go forward here. Really, what workers' comp today is a balance of laws and interests, because when you think about workers' comp and what we can do as insurance professionals and risk managers, we have the opportunity to help people. We have the opportunity also to help businesses succeed financially. Now, you heard in the video, they can avoid large claims, and that's a part of it. There's some other things that we can do. We won't get into the too much of a dive into it today, but there are some other things you can do for a business to really help them mitigate these claims, pay less in their overall workers' comp costs, and help them save money in some other ways as well. Hey, and guess what? You keep your employees safe. What a great thing. So it really does balance both the interest of the worker and the employer. Previous to this system, this exclusive remedy that we recognize as workers' compensation, previous to this, it was open for lawsuit, right? So you could sue for negligence, and the employer had some defenses that worked pretty well until this human capital idea started to gain steam. But at this point, with this exclusive remedy, you cannot sue just for an injury. Now, you can litigate a claim down the road. That's different. But you can't sue for negligence for an injury because of this first line remedy. As the employer, though, you have to give up those defenses, and you're obligated to provide the coverage. Really, it's a win-win for everyone, and it takes care of it. So workers' comp, being a patchwork of state laws, as we recognized in the United States pretty early on that this is going to be a states' right kind of a thing. Federal government was a little ahead of the game there, going back to 1908, by the way, for federal workers. But it took until the mid-20th century to really get everything in place. So we have this patchwork of individual laws, but they do have really some more common goals than not. And see, here's just 5. Paying for medical services, right? Someone's hurt, from immediate medical to emergency room, ambulance, all the way through to provider visits, physicians, maybe surgeries, medications, so on and so forth. and also pay those benefits promptly. Wouldn't work very well if everyone's slow and we're not providing the best service. Instead of relying on carriers to, hey, provide great service or not, it's actually built in to start making benefit payments pretty promptly. Every state statute gives claim organizations a certain number of days to go through their initial investigation process to even determine compensability, and then start paying providers. So you're on the clock as an insurance company, as an insurer, when this happens. So to pay these benefits promptly, of course, to eliminate the delays and costs of litigation, so you can't just sue for negligence with workers' comp. Again, you could litigate the claim down the road, I suppose, if you're not happy with it, but that's a whole different deal. Establish a guaranteed benefit payment. So benefits are pretty straightforward when it comes to state statute. And then, of course, promoting industrial safety. So if it's not inherent, you can kind of see that as a business owner, oh, I think I get it now. Just with market conditions, the fewer accidents I have, the safer business that I run, the less I'm going to pay when it comes to insurance premium. So it really promotes industrial safety. And then, of course, when you get the insurers involved, they very much have a vested interest with risk transfer. They're more than happy to go out and make sure this is the safest workplace it can be in a really consultative manner when done correctly with their clients. So there is patchwork of laws, and you may notice, or you might not know this, but there are different ways you can actually end up placing this coverage. So taking a look at the United States here, we have a few things going on. So we have our gray shaded states and then our blue shaded states. And you'll see by the key there that there's a state fund not available or a state fund that is available in blue. And then you see the 4 M's. So the red M's are monopolistic states. So monopolistic states, Ohio, North Dakota, Wyoming, Washington State, all coverage goes through the government in this case. So there are no private carriers working in this state. Where my company is based, AF Group in Lansing, Michigan, right across in Ohio, that would most definitely be a market for us. However, Ohio's monopolistic. You take the state essentially takes care of it with one of the state entities there. But in other states, you have either private carriers only or a choice. So here in Michigan, where I'm based, you can see in the mitten that we're gray. So it's just state funds there. And in Georgia, we're Tandeka's neck of the woods. That's also only private carriers selling there. There aren't any state funds. But you go next door to Tandeka in South Carolina, well, guess what? There is a state fund a competitive state fund that you could place business with. In fact, some of these, look at the left and the right, California and New York, those state funds are so large, you'll see them on written premium list as one of the top writers. That's how large these funds are. So there's different options for different cases depending on the situation and what's ultimately best for the client, the business needing this coverage. So different ways to obtain this. So we're going to cover a lot of things with this, and I wanted to get into benefits now, but I would like to open it up with everything we've discussed. Does anyone have anything I could maybe revisit? Any questions? Of course, as Tandeka was saying, always feel free to raise your hand. I have a chat box over here on my other monitor, so I can check those out as well. Anyway, throw something in chat if you would like.
I do have a question.
Yeah.
I could get us, kicked off. So, what happens if a employee is like injured in a different state, right? So you mentioned like Georgia, South Carolina. So what if they're injured, they're based in Georgia, but they're injured in South Carolina? So what happens in those situations?
Well, a few instances, Tandeka, that could come into play and how it's covered. One, there's a list of locations, which is state dependent. And so essentially, if you have, let's say, a Michigan location and a Georgia location, you would have both of those on there. You're definitely good in those states. But for other states where maybe you don't work very much, maybe you're passing through, start thinking of trucking operations or something like that. There's a Part 3C to this, which is called Other States Insurance, that fills in that gap. So if you just happen to be there, that's how you'd get coverage. But if you're intending to either work there or to set up a business, a brick and mortar business, you would definitely need to have that as a location to make sure there's coverage. So for temporary cases, there is a Part 3C that gets in there that's useful for that case. Good question. Any others? Okay. Well, certainly keep them coming as they pop into your head, but workers' comp benefits, Tandeka, that was a really good question there. So if anyone asks you, what exactly do you do? So we're work comp specialists at AF Group. What is it that you do here? Well, here's what we do for people. What is it that you're providing with this insurance contract? Well, here are those basic buckets: medical services, your lost wage, which is awesome. And that was one of the issues with the Industrial Revolution is there was not a lost wage benefit. So you're hurt at work. Not only are they not paying medical for work that you're doing for someone else, they're not, and you can't go back to work because you're hurt. You're not making money. There's no compensation for that wage loss. So you're really falling into poverty. That was one of the issues that eventually prompted the need for this universal system here. So lost wage, rehabilitation benefits, your physical therapy, your occupational therapy. This is really cool. Let's just say you have a very physical job and you have an injury, maybe to your right shoulder, and you're a carpenter. Well, I can't swing a hammer anymore. I'm permanently injured to some degree. They might even have retraining for a new career, which is fantastic. Hey, we're going to give you some skills so you can start over or start with something different because of this injury you had. Can't do construction anymore? No problem. Maybe construction management. And of course, there is a death benefit if someone were to pass away as part of a workplace injury. Great question, Gideon. At what point is negligence established or used to determine a claim for workers' comp? 0. Negligence is not an issue. This is a no-fault coverage. So you can, now with the exceptions, we get into exceptions here, and I won't get into those weeds, but if you intentionally hurt yourself, that actually is not covered. But if you're just negligent, there's no clause in there. This is a no-fault system. So if you're hurt and it really is a compensable injury, and we're going to talk about that here in a little bit, what is and what is not, there's no need to determine negligence or non-negligence. Great question, Gideon. So this is wonderful. I mean, when you think about it, we take people as they are. It doesn't vary on whether you're negligent somehow and make that determination. That's first line coverage. So let's pick apart these just a little bit. Medical benefits. I want to kind of breeze through these because I know we have a decent amount of content here. Emergency room, chiropractic. I mean, the list goes on and on. Home modifications. What if, I'm used to having a little pointer here. What if you're hurt to the point where you can't even get into your house? Maybe you're wheelchair bound for a period of time. They would modify your home so that you can enter it. I mean, things like that, psychological treatments, therapy. People that are out for long periods of time go through psychological issues. In fact, if you look at a pharmacy benefit manager on what's from a report from one of them and what's being prescribed, you would notice that antidepressants are one of the top 10 prescribed, or at least they have been, medications. And you wouldn't think that, but I think it's for people that have long-term recoveries. And I kind of experienced that myself once. I had pneumonia years ago, and I was just sort of shut in for a couple of weeks. And I found myself really down. I get it. So this is really interesting. Medications, of course. Now, your wage replacement, your wage loss, is also called a disability or indemnity benefit. These are all synonymous terms. And when you think about an injury, it can either be temporary or it can be permanent. It can be total or it can be partial. And that's why we end up with this 4 buckets. Temporary total disability. So I'm just hurt, I'm out, I can't work. However, it's temporary, I'm going to heal. Maybe I break both of my legs and I just can't do anything because I have a physical type job. Now, my real job, I could do that because I'm doing this, but let's just pretend. Temporary partial. All right, it's temporary, but it's just kind of partial. So going back to the shoulder, just because you can see it, I tear my rotator cuff or something, but I think it's going to heal essentially 100%. It's just going to take a while. Okay, so it's temporary. Once we get into the permanent things, now things change. A permanent partial, so maybe this injury where, okay, my shoulder's not going to heal up and maybe my range of motion is only here, but I can't do any better. At that point, a physician might make the call that you've reached maximum medical improvement. And the reason I bring this up is you really can't determine what your benefits are for this permanent partial disability until you've reached MMI, max medical improvement. Permanent total, worst of the worst. Very few claims meet this, but if you do, you're permanently and totally disabled because of a workplace injury. Certainly hope that that does not happen, but it does, and there's a benefit for that, which is good. Moving forward, these rehabilitation benefits, I mentioned the physical and vocational rehab. Really, it just tries to reduce that cost of injury when it's all said. And here's that vocational training when it's all said and done is very helpful. And it is provided in all states. Some states include this a little bit or parts of it within their medical, but there is a rehabilitation benefit in some way. California, very different setup. We'll get into that right now. Death benefit is what it sounds like. The amounts vary by state. Sometimes it does go into, or the number of dependents goes into the calculation. There's even a burial allowance. It's not a ton of benefit, I guess, from a dollars and cents standpoint, but at least it is there during the worst time that anyone could experience. I'm talking family members, survivors. Antoinette.
Yeah, I was just curious. So if a family receives death benefits and it's a work comp claim, can they say down the road, sue the employee's employer?
I'm going to say
Any
no.
additional, or
I don't
is
believe. Yeah, I
that
think
it?
because you're utilizing the exclusive remedy of workers' comp, at that point it would take care of it. Now, I suppose if maybe if there's an attorney on the line and say, well, hold on, and maybe if something else came to light, possibly. But since you're utilizing this exclusive remedy, I'm going to say no to that. It's a great
Okay.
question.
Okay. Thank you.
Yeah. Any other questions?
Yeah. Sorry, I
Yeah,
do have a question.
sure.
So aside the death benefits where dependents benefit from the workers' compensation, are there any other benefits for dependents?
There really aren't. So this would essentially be the best way to describe it. We're sorry that your loved one has passed. The very least we could do for you is try to compensate for some things you're going to need, such as burial allowance, such as keeping the family and the whole household income alive for a period of time. And I think that's where those dependents come into play. So a little bit of essentially wage loss replacement during this sudden time. So it doesn't go on forever, but so the dependents themselves don't receive any benefits, but I suppose the surviving spouse, or in the case if there wasn't one, just the children, I guess they would receive this. Now that I think it through. Any other benefits? No, it would just be within the death benefit category. But it's nice that it's in there, right, Princess? So not only is any survivors there, but they have to keep going and they're suffering a tragedy. You can see the compassionate side of this on insurance, which is normally not considered a compassionate thing, but you can see that it's inherently in here, which is a great thing. Great question. Thank you.
Yeah,
Anyone
and
else?
I have a question too. So with, these death benefits, is this something that the employee would have to sign up for, when work would
Oh,
deploy, or is this just automatically like an employee passes away and the employer is automatically, these death benefits would kick in?
yes, this is automatic essentially. No one has to sign up for anything. Just by being a regular employee of a company that has a workers' comp policy in place, you're eligible for all of this in the event of the injury. Now, if they didn't report it, it'd be a different story because it's not reported, but obviously it's going to be, and I'm actually going to talk about reporting in a little bit. Really good questions on this. Thank you. One of the things, and I hate to move on so quickly, is employer's liability. And this is kind of interesting too. This is actually the one place on a workers' comp policy where you'll see a limit of coverage because workers' comp depends on state statute, so state law. So if you'd actually were to see a workers' comp policy on paper, it's very thin compared to maybe a property policy that's that thick with all the forms. And the reason is most of really the policy forms, the coverage is on state statute that everyone can just look up and find on their own on what that is. Well, inevitably, something can happen that falls out of state statute. There's always going to be something that could just not be fully in there, falls outside, or whatever the case may be. But yet the employer has maybe an obligation or possibly liability because they have an employee that needs some help here because they were injured. Well, employer's liability kicks in for this reason. It does provide common law liability, as it says, for employees where workers' comp is not covered by law. And essentially, it closes the gap. In fact, it's called stopgap in these monopolistic states I mentioned. So a couple of examples of that: intentional acts or tort by the employer. So think of this. Maybe there's a coal mining operation, any kind of mining operation. They deem one day, because they take a lot of readings, that there's some noxious gases in there and it's generally basically unsafe to work. However, maybe you have a manager that says, I have goals, production goals, and I'm going to meet them. So yeah, it's unsafe. I'm not going to go in there, but you, my employees, my group, have at it. I'll see you in 8 hours after your shift. That would be an intentional act or tort by an employer because you're putting your employees in harm's way. You know what I mean? So it falls out of state statute. There's a different reason for that injury, and it's not specifically included. That's just one example. Loss of consortium. So check this out. Let's say you're pregnant. Let's say you have a workplace accident and there's an injury to your unborn baby. This actually picks up. So that would be a case where employer's liability could pick up. So this is a really, really good coverage. It's standard to put in kind of at low limits. A lot of times agencies will bump those up on purpose for a very small amount of money and just present that to better serve their clients. So employer's liability is a good thing. That's something interesting in workers' comp. When we get into the claims, though, claim services, inevitably, when this injury or the injury does happen, what do you do? Okay, what's the process? Okay, basically, here's how it works. You get injured, immediate medical attention. Go ahead and take care of that person. Obvious stuff. Don't worry, it's going to be covered. This immediate medical. Report the claim. And you would think, well, that's no big deal, but sometimes there's a lag time in reporting, which we're going to talk about next. Here's the nice thing about reporting. It's easier than ever. I've been in the business for a while. Back in my day, there was remember fax machines? Yes, those were hot and heavy, and you would have to fax over, and probably before that, mail over a claim form. Well, now you can just go online. It's right there. There's actually another way we're going to talk about later that carriers are doing it. Provide those injury details. Are there any worker restrictions? Because ultimately, we're going to consider return to work programs. And I'll talk about those here in a minute. And we'll talk about what that is and how it helps people. And of course, communicate with your claims adjuster when it has that. So get this thing reported, get the process moving so that people can be compensated for their workplace injuries. Here's one of the reasons I mentioned lag time reporting. So this statistic has a little bit of age on it. I guess it's 10 years, but it's from the NCCI, National Council on Compensation Insurance. I'm sure many of you have heard of it. They did a study on reporting lag time and what the ultimate cost of claims would be. Well, within 1 week, right out of the gate, 10 years ago, you're looking at an average claim amount of $14,000. I'm sure that's gone up quite a bit. Interestingly enough, it actually goes down a little bit in week 2. But in week 3 and 4, as you can see, the costs increase. So just by not reporting a claim quickly, we're noticing a trend on ultimate costs of these claims. And it makes sense. If the claim's not reported, that means nothing's happening. The wheels are not in motion. Where's the care for this injured person? They may just say, oh, I don't know what's going on. My employer doesn't care. And then what happens? You're home, you're not being cared for, and who's on TV? Attorney commercials and things like that. People tend to, oh, maybe I do need to get a lawyer. Well, I don't think you necessarily do. And of course, they're right if they felt like it, but this remedy, this workers' comp works if you work it, so to speak. One of the great ways to do this now is, well, we call it telecomp care, but really telemedicine. So this has become very standard within the industry, and it does a couple of things. One, it cuts down lag time because now you can call someone and speak with a nurse case manager, someone that actually knows how to treat your injury. They find, or we have found at least, that about half of these are self-care. That's great. If it's self-care, that means no emergency room visits where people tend to go when, even if it's a light injury, no other modalities. If you can do this at home without having to go to a provider, that's automatically not only probably quicker for you, but also going to lower the ultimate cost to the employer. Ultimately, the total cost of these claims usually decrease. And guess what? With this is your first report of injury. So just by calling now, you've reported early, the wheels are in motion, people know what's going on, and it can start working for your employee, which is the whole point. Remember, take care of people, help businesses. That's what we try to do as insurance professionals. In this case, we want to make sure we're taking care of people just to the best of our ability. Now, I mentioned with this reporting, and I mentioned earlier that everyone is on the clock as far as going through their initial investigation process. All right, making sure that this is even a compensable injury is a big part of that. Because it turns out, even though this is no fault, not every injury is compensable. Yes, and here's why. In order for an injury to be compensable, well, one, it needs to be accidental, so no intentional injuries just happened, right? But also it needs to arise out of employment, but also be in the course of employment. So let's talk about that. Rising out of employment really means was the cause of the injury connected to the employment itself. All right, I've got a pretty low injury potential job here, so it's hard for me to do that. But think of an example for myself. But if you were looking at maybe a street paving, road worker, that type of work, if as long as you're doing that, injury happened while you're in the course of that work, it is connected to your employment. All right. But also must be in the course of. And that deals with the time and the place. Were you where you're supposed to be? Activities of the worker where they engage as required by the employer. All right, where you'd had doing the duties that someone in your type of role would be expected to do. So if you meet these really three criteria, with the first being accidental, you have a compensable workplace injury, which is a good thing. If it's not compensable, then you have a denial. And I suppose that's where some litigation could come into play at that point, because the carrier's denied the claim, but they're only going to deny it if it really falls out completely of these requirements of what's compensable and what's not. I can say with some confidence that the industry does want to pay claims. They do want to take care of people. They want to pay what's owed and do it quickly, but stick to the what's owed part, because costs can get really out of hand, and ultimately your rates as a carrier can get out of hand too, and now you have a real issue from a competitive standpoint. One of the things that goes on with a claim that's an open claim is setting reserves. So if you're not familiar with a reserve, it's really the ultimate amount, the ultimate claim value at any one time. So initially it'll be assessed maybe in that 7 to 14 day period, maybe a factored reserve just based on the information at hand. But as time goes on, different things might impact this reserve. Keep in mind, when a company reserves dollars for claims, they are literally setting this money aside just for the purpose of paying claims. It is out of operating income. All right, so that money is set aside, and they do it at different times. They really do need to get it right for being competitive financially. So there's a lot of things that go into these reserves, obviously, from the expenses themselves to the state of the injury, to what is the wage loss benefit. A high earning employee is going to require larger payments on their indemnity, their wage replacement, than someone that doesn't make as much. What are your loss adjustment expenses? Are there legal fees or attorney fees for investigation, or maybe translation expenses, or different things like that, different allocated loss adjustment expenses that can go into this? And where are we going with this? Maybe you've had a surgery and it went better than expected. Oh, we can back that reserve down. Recovery's improving. The outlook is improving. Maybe though, you have a surgery and things, we have a few problems. We're going to have additional surgeries. Now, maybe you'd increase that reserve. Tandeka.
Yeah, so we have a question in the chat from Gideon. But Gideon, I don't know if you're in a space where you can unmute yourself and ask your question. Do you feel comfortable doing that?
I think I have it, Gideon.
Yeah,
and
hello?
Yeah,
Hi.
Gideon, I thank you for that question about purchasing workers' comp and employers' liability together or separate. I have never actually seen a workers' comp without employers' liability, nor have I ever seen just a monoline or standalone employers' liability policy. I suspect it might be out there, but I don't think it does. So really, in all reality, you're going to see them combined every time. Any follow-up to that, Gideon? Just let me know. And thank you, Tendek. I did not catch that on my chat, even though I said I was monitoring that.
No,
Okay.
no worries.
So moving on. So we have claims issues going on and different things to
Hi.
work with a claim. Yes.
Sorry to cut you. I also have a question.
Sure, Princess.
So when you were talking about how soon or how early injuries have to be reported, I don't know if you covered this, and I'm sorry if you did, but I wanted to ask how soon or how early should an injury be reported?
We like, within the first 24 to 48 hours, ideally, is our position. Probably that's pretty common. And that is a great question. Thank you for that, Tendeka and Princess. Sooner the better. I mean, ideally, you'd like it same day, but think about it. You might have an industrial accident where you have site cleanup. The place is a mess. You have to clean up physical things. You have damaged equipment, not to mention maybe a severely injured employee, and people see this and they're scared and they just witnessed. It might take time. You're just not going to get to it. You need to take care of your people that day. So it might take a little time, but as soon as possible, and certainly within the first few days. And in that chart I was showing you, that if you wait just by the number of weeks, once you get to these markers, statistically, it tends to drive up the value. I think you can go back quite a ways and actually claim an injury. And I don't know, every statute might be a little different on that. As in, we're 2 years after something happened at work and I claim a workers' comp injury. That might be a little excessive, but generally speaking, it's to the employer's benefit to report these claims as quickly as possible. Okay, so we have a few minutes left and actually a decent amount of ground to cover. I just want to talk about loss control and experience rating. You can see, and I have a few of these, what's wrong with this picture. I tell you what, just for the sake of speeding things along, we're actually throwing chat. If you can see some problems with this picture, what do you think? That's funny, Tandeka. What can you see? What are some issues? One thing, and I'll start off, one thing you can't see is there's actually a line that goes right here if you were to see this photograph in reality. So certainly some of this is over the line. Boxes all the way up to the ceiling, good catch. And that's if you're a property underwriter, that comes into play for sure with sprinkler systems. Unstable, Antoinette, thank you. Leaning tower of boxes, all kinds of things. You're just waiting for an accident to happen. Now, how about this gentleman? And I'll give you a cue. What does it say on the top step of a step ladder? If you've ever noticed, it says, do not step here. This is not a step. Well, what's he doing? He's on a step. And it also makes you wonder, yeah, there we go. What are the safety measures? Is there a helmet? Is there any type of tie-off? Is there anyone even holding the ladder to witness? Is this person a maintenance employee? It doesn't appear based just on the attire here that this would be someone that, is even, trained in the right way to maybe replace a light bulb or something like that. So different things, someone maybe out of their element. I do have to admit it, in my old job at the agency, I did this one time on a swivel chair. I won't do it again though, but I should have known better. So different things can come into problems. Sometimes it's obvious, sometimes it's not. Check this out. If you're interested in safety, according to the Department of Labor, and we tend to agree, research has shown that if there's anything you can do for a company, the single greatest impact on reducing accidents is having a culture of safety, a safety culture within the organization. So what is a safety culture? It's safety from the top down. It's management, senior management deciding this is how we are going to behave as a company, and we're going to take safety seriously. As much as it is to make a great product or provide a great service, we're going to take steps to make sure that we are all safe on the job. And when you have that, you need that from the top in order to buy in, to make it cultural and not just a fad, a 30-day thing, and it's forgotten about, something we do every single day. That's what you want to develop, and you can work with your loss control consultants to try to develop that. But really, essentially, it can be a mind shift a little bit with your business owners. One way to get there, by the way, is showing them what the ultimate savings it can be, maybe through experience rating or some other means. Okay, Michael, a few questions. Part-time or temporary workers eligible for workers' comp? Yes and no. Part-time for sure, because they are regular employee. Temp workers, it depends on the situation. Usually a temp worker, the coverage would be provided by who's providing those temporary services. Okay, that temporary employment agency. Leased employees on a long-term work a little different. What happens if a claim is denied? It can be appealed. Every state has different appeals process for that. I think usually when there's a claim denial, that's when people do seek representation, legal representation, but I do think there's always an appeal process. Workers' comp and healthcare and disability benefits, they try to keep them separate. You may notice if you go into a physician's office sometime, they might ask were you hurt at work? Maybe you have a shoulder problem. Again, I'm using the shoulder, I know, just because you can see it. They'll ask if you're hurt at work, because they know that now we're going in a different direction. Now we're going to be providing services subject to essentially state caps or whatever the state's going to pay for provider services, and everyone's different on that. So they don't interact very much at all, to be honest with you. But yeah, I can see the interplay. Workers' comp, Nima, this is great. Pre-existing injury. Okay, the answer is yes. We, as an industry, take people as they are. So if you have a pre-existing injury, that's fine. We're going to take you as you are and work with that. Now, re-aggravation, though, this is the kind of thing where now you have long-term injuries, and that pre-existing could actually drive up the ultimate value, drive up the reserve, create a situation where you're going to have a much longer-term recovery. So yes, you take people as they are, pre-existing injuries, no problem. Now, experience rating, what is that? Really, that is an objective, or tries to be objective method of tailoring the cost of insurance to your ultimate risk characteristics. As you can see, it shows the benefit of a workplace. So what happens is this is based entirely on your actual losses that are reported up from the insurance carriers to the state rating bureaus or the NCCI if you're an NCCI state. What it amounts to is if you have fewer losses than what's expected for your type of business, and this is based on class codes, you're probably going to have a lower mod and hopefully ideally a credit modifier. So that will reduce your premium by a certain percent. But if you're more than expected, you're most likely going to have a debit multiplier. So you can see that this is a tool which gives the ability to modify insurance premiums based on actual loss experience. So it's a really fair thing. But this is the kind of thing that can create a competitive advantage when used correctly, because a number of employers think, well, it is what it is. Well, no, it's not what it what it is, because we can do things to mitigate risk. We can work with loss control. We can hopefully get to that culture of safety, but start working towards it. And ultimately, it can make a big difference. Look at employer A, and these are just happen to be two restaurants. They're not too, they're concerned about multi floors and landscaping, maybe not so much employee safety. Their mod is 1.23. That's 23% of a surcharge. The next restaurant there, they do it right. They want to make sure that their walkways are taken care of, that there's slip mats, that their employees understand burn exposures and how to avoid those, and just different things like that. Their experience mod might be a 0.88. It's a 12% credit on that, and the ultimate premium swing can be pretty substantial. So using this to their advantage through loss control, claims management, and other service and return to work programs can really benefit the employer. By the way, return to work is really just getting someone off the couch and back to work as soon as medically allowable. So the providers drive the bus here. The providers say this, the insurance companies don't. So this is a good thing. But I will say this, statistically, at least according to Crawford and Company, I'm sorry, this is an NCCI as well. If you're out for 12 weeks, 3 months, statistically in this study, you only have 50% chance of ever returning to work in the first place. So if you're injured and you're not able to do anything for that period of time, your chances of getting back into the workforce aren't very good. By 6 months, it's 20%. By a year, we're looking at 1%. Now, is return to work automatically going to fix that? Not necessarily, but it can be very useful in helping the recovery of an injured worker. Because think about it, if you're sitting there stagnant, doing nothing, you kind of atrophy. You're not moving your body. But if you're at least up and around, working with your coworkers, having those social contacts, this is a lot better and helps that and speed that recovery process. Plus, some of these temporary assignments to do it. So using the shoulder again, I can't swing a hammer, but maybe I can do some back office work and some paperwork, or maybe draw up bids, things that don't require physical work as I transition back to my normal job. And sometimes people find out that this transitional work, they don't like it that much and they can't wait to get back to their normal job. Return to work has an advantage there. But you could modify it, all right? Maybe job share, maybe not have all the requirements of a certain job that are physically reducing hours. Different things you can do to be creative. Sometimes, depending on the state statute, you can even use charitable organizations for this. I won't get into it, but that's a tool as well. So return to work, while it started in the 1980s, has really gained steam, and certainly in the last 10, 15 years has become a standard within the industry. And it's showing to reduce the ultimate cost of claims by less wage replacement. So you're not out as long for that disability benefit, but also improving faster. So now we have a benefit to recovery faster, so benefit to the employee, but also with this lower ultimate workers' comp cost, a benefit to the employer as well. So it's a really, really good thing. Your carriers work with it, and they can walk you through all of this. Now, remember, as I get ready to close things out here, when we were talking about experience rating, rate changes come into play because sometimes rate changes, while it seems good or bad, depending on what it is, there's some other factors involved. So let me explain to you how rates work. Essentially, every state rating bureau is going to publish rates for different classes. Everything's based on class codes. They try to group lump like companies and operations into single classifications. So actuarially, you can actually come up or determine an effective rate to cover losses, to cover the payments for injuries, wage replacement, and things like that. So that's essentially this pure premium rate as it's known. However, what's going to happen is every carrier then decides what our multiplier needs to be, as in how much do we need to add to that pure premium rate that just covers the loss expense or the loss potential to account for our own operating costs, our own needs for a certain level of profit, whatever it may be. So there's a multiplier. So there's a base rate that's really essentially the same for everyone, but every carrier has different multipliers, and that's how you end up with different rates between carriers, which of course impacts marketability. But here's the thing about pure premium rates. Let's say the rate goes down. You're like, oh, this is great, we're going to pay less. But now, that actually, considering we're looking at actual losses over expected on the experience rating, your expected losses might go down as well. So if you're not taking care of it from the actual loss standpoint, you can end up paying more. It doesn't make a lot of sense, but there's a different rating element with experience rating. If we get into some more, we can take a deeper dive into this. And actually, my organization puts on a really interesting class, I think, that talks about these types of things. But rate changes can impact the policy, but ultimately, in order to make this work, at least from a client or from a policyholder standpoint, in order to help them financially, because we want to make sure, of course, the people are taken care of, but the second part is the business taking care of them. You're going to have to reduce the injury costs, really create a safe environment. Make sure your hiring practices are up to par. And check out those experience rating calculations, and also make sure that they're correct. Carriers sometimes make mistakes and the wrong information is there, or sometimes claims aren't closed out and those reserves are included in there as well. Joshua, I know there have been some changes regarding workers' comp and independent contractors. Yes. Should employers include independent contractors in their payroll? Well, the basic answer there, Josh, is no, Joshua, because independent contractors are not intended to be covered. Regular employees are. So regular employee, they ultimately get a W-2 at the end, but your independent contractors that work on a 1099 basis, we're not intending to cover that. They should have their own insurance. So I would say no to that. However, what can happen is if you hire someone, let's say you're a general contractor and you hire an electrical contractor for a project you have, if that electrical contractor does not have workers' comp on their own employees, they then become a statutory employee. It kind of feeds uphill, and the general contractor in that case would be forced to pick them up. But generally speaking, Josh, no, you do not want to include independent contractors in payroll. It's an excellent question there. This comes up all the time. We talk about it. All right, make sure to put in their contract you're not responsible for, yeah, there you go. Creating a work contract in that case, yeah, if you have that, hey, we are not going to be responsible for your employee's worker's injury, and that's one way to do it. Excellent suggestion there. And of course, get the certificate of insurance. One reason why your insurance agents are so inundated with these requests. So as I get it to wrap it up, and I know we're over time just a little bit, talked about the evolution of workers' comp, how it came to be, what our benefits are. Just touch really briefly on loss control, experience rating. If there's anything a company can do, again, embrace a safety culture. The safer a company is, the better that company is going to be. It's just the truth. The employees are taken care of. They're upbeat. They know that they don't have to worry about injury necessarily. They know their employer cares about them, and it really helps their bottom line as well. Thank you so much for being here. If you are interested in some continuing education with us, check out our website. You'll see our team on there, and yours truly, of course. We've got a lot of things going on there. Our CAWC program is one that you might find interesting. That's what I was alluding to earlier, that really gets into a deeper dive on all of these topics. But really today, just wanted to give you that overview. That's workers' comp in a nutshell, folks. I know we talked about a lot, but what questions do you have before we get on out of here?
Yeah, and I'll have to scan the chat box as well. I think you answered all the questions that were in the chat box, but if anyone's question was not answered, please let us know. For those that need to hop off, please feel free to do so. For everyone else, please join me in a virtual round of applause for Joe. Thank you so much for being here with us and hanging out for an hour. This was super, super informative, so we appreciate it. So as mentioned earlier, we do host these sessions on a weekly schedule throughout the summer. So this is our summer kickoff session. So next week's schedule will be, or next week's session will be on Thursday, May 22nd from 1 to 2 Eastern. Our presenting company is going to be WTW, which is Willis Towers Watson. And our guest speaker is going to show us how to find a career that you will love. So please feel free to check out our website, register for all of our summer sessions and beyond. We also have the fall schedule. So we have the entire 2025 schedule that is up on our webpage. So please feel free to sign up for all of our sessions. And thank you again to Joe for hanging out with us, and for all the students that are here. I will catch you next week. Thank you again.
Thank you, everyone. Thank you, Tendek, again for the opportunity. Really appreciate you. Have a great day.
Thank you. Have a good one.